Hey everyone, Bryan Marx here, Tampa Mortgage Dad and real estate finance guy who actually reads the fine print so you don't have to. There's a massive proposal gaining steam in Florida right now, and one that could change homeownership forever. So lawmakers are talking about eliminating property taxes for homesteaded homes starting in 2027, and it's set to appear on the November 2026 ballot. So pretty big news, pretty big event. So today we're breaking down exactly what that means, how it would even work, and what the ripple effects could be for homeowners, renters, investors, and Florida's economy as a whole. So here's the short version. Florida House Joint Resolution 201, or HJR 201, aims to abolish the non-school portion of property taxes for primary residents, homeowners, also known as homesteads. So your tax bill, which usually includes city, county, and school district portions, would keep the part that funds schools, but potentially wipe out the rest. Now, the proposal was filed in 2025, and if it passes the state legislature by a 3/5 vote in both the House and the Senate, it goes to voters in November 2026. So to become law, 60% of voters must approve it. Now, if that happens, the change would take effect January 1st, 2027. So, big question, how could this actually happen? This isn't a simple rate cut, it's a constitutional amendment, and that means lawmakers can't just tweak it later. It permanently changes Florida's tax structure. So to make that happen, here's what must align. Legislative approval with a 3/5 supermajority, voter approval of at least 60%, an implementation plan that explains how the state will replace billions in local revenue. That third part is the biggest challenge, right? That's the question mark. So property taxes fund essential local services like police, fire departments, roads, parks, county operations. So if property taxes disappear, the money has to come from somewhere else. So options include expanding the state sales tax, increasing fees or tourism taxes, or cutting local budgets pretty drastically. And right now, lawmakers haven't agreed on the replacement mechanism, which is why many analysts are calling this proposal very ambitious, maybe even unrealistic. And honestly, without a clear funding plan. So what could it mean for homeowners? If it passes, the average Florida homeowner could see a massive drop in their annual property tax bill, potentially thousands of dollars a year. And that would improve affordability and honestly could even push home values up because the monthly payment math looks better when property taxes shrink. But there's a flip side. Without local revenue, services could suffer. So counties might reduce infrastructure projects, raise local fees, maybe introduce new assessments to make up the shortfall. So the relief on paper could be replaced by higher costs somewhere else. The money just doesn't come from somewhere. Just under a different name. It could also create tension between homesteaded owners who benefit and non-homesteaded owners like investors or second home buyers who might still have to pay the full property tax, making those properties more expensive. The broader economic ripple, let's just kind of like zoom out. Florida's economy thrives on migration, people moving here for low taxes, sunshine, and affordability. So eliminating property taxes could make the state even more attractive, especially for retirees and businesses. But if the funding hole isn't solved, counties could struggle pretty substantially to provide infrastructure for their new growth, meaning lots more congestion, slower services, or rising local costs over time. And what homeowners should do now. So here's what you can do while this plays out, because we've still got some time. Know your numbers, look at your property tax bill, see how much is non-school. That's the portion being discussed. Follow the updates. The final ballot language could change, so stay tuned through official channels, not just social media headlines. And plan both ways. If taxes fall, consider how you reinvest the savings, maybe extra principal payments, home upgrades, emergency funds, investing that money. If they don't, keep budgeting for steady or maybe even rising taxes and engage locally. Your city and county governments will have options, and they're the ones most affected by these changes on the local level. So here's my take, right? This proposal is pretty bold, maybe too bold without a real plan behind it. Personally, I just don't see how Florida could unwind something this massive and intricate. We're talking billions and billions of dollars in local revenue that fund basic services, again, police, fire, infrastructure, you name it, everything. So even if the state tried to replace that money through higher tourism or sales taxes, that creates a new set of problems for Florida, and Florida's economy runs on tourism. So taxing visitors could honestly heavily end up hurting the very engine that keeps our economy strong. So while I really think the idea taps into a very valid frustration that housing costs have gotten a little out of control, I don't think eliminating property taxes is the real fix personally. The real conversation we should be having is, how do we make homeownership sustainable without destabilizing the entire system that supports it? And we need smarter reform, not like shock therapy. So if you're a homeowner, investor, or just someone trying to understand how this might hit your wallet, don't wait around until 2026 to care. Pay attention now, because these decisions will shape the Florida housing market for decades and your local economy. If you found this breakdown helpful, hit that like, drop a comment with your take on whether Florida should eliminate property taxes, and subscribe to me for more updates as this story develops. And if you ever want to see how potential tax changes could impact your mortgage or buying power, reach out, DM me. You got my number. I'll run the numbers with you, and I'll see you on the next one.